So, we are now going to start with a new chapter called as corporate valuation, also called as business valuation. In the book you will find the name, AFM book you will find the name called as business valuation. You can also call it as a corporate valuation. Both are same. So in our notes I kept the name as corporate valuation. Okay. So corporate valuation chapter, learning objectives are very less, but there will be good amount of problems and nice concepts that we are going to learn in this particular chapter called as corporate valuation. You properly do all the questions in the workbook. Take any number of questions given in the past exams, just like that you will solve. Because the idea and the essence of the entire business valuation chapter I kept in the form of, I think 30 problems will be there. Let us see how many problems are there. 27. 27 questions will be there. 27 questions of corporate valuation if you do. In the question bank I kept another 20 questions extra. Repeated type of questions. No great creativity. Repeatedly same question, numbers will change. So if you do properly these 27 questions, 27 different models of questions I have to do. Clear everyone? So first write down the learning objectives in your notes. Keep the heading. Chapter number, in our classes it is chapter 3. Book it is chapter 4. In our classes it is chapter 3. What is the name? Corporate valuation or business valuation. You put business valuation. First I want to ask you one question. After this, what is the next chapter we are going to begin? Bond valuation. That also will complete. We complete share valuation, mergers, business, bonds. Once all these complete in a portfolio, we will learn as a whole. Are you understanding? So, keep the heading business valuation or corporate valuation. Write the learning objectives. Okay, completed? Completed copying all the learning objectives. And again, at the beginning of the chapter, I am telling to everyone, Don't see the answers. Answer book was given for your future reference, not for classroom reference. Clear? Classroom lo don't open any answers. Write down all the notes in the class. Anyway, theory notes, theory whatever we have to write, I am skipping anyway because book is already there. Problems, don't do any kind of mistake. Clear everyone? So let's begin. So learning objectives, need for the chapter basic share valuation, two-stage dividend model, EVA, MVA, free cash flows again two types. Free cash flow for firm, free cash flow for equity. And again in the two types, general approach, per share approach and miscellaneous. Okay, learning objectives are very small, easy, but concepts are very complicated to understand. Great deal of new things we are going to learn. Let's see the chapter. Okay, shall we? First point number 1. Why this chapter? What could be the possible need? Okay, see here. I will ask you one question, answer. Okay. See here. We are doing the valuation of a business. For example, a person wanted to buy a share. How he will do the valuation of a share? Present value of all the future dividends that he is going to get, discount to the today's value, he will value the share. The value what he get is the MPS of fair value. He will compare it with what? Market value. If the market value is lesser, he will buy. More, he will not buy. This is what he will do. No. I am not just buying a share. One company wanted to merge with another company. One company want to merge with another company. When merger is going on between two companies, I just don't want to value the share. I wanted to value the company as a whole. We already just completed the chapter mergers acquisition. Now, observations required. How good we are in connecting mergers chapter with business valuation. Try to understand this. Mergers we have done so many questions. Different models we have done. Okay, undiluted EPS we have done, undiluted MPS we have done, valuation MPS, EPS, NAV basis, cash offer, share offer, cash offer versus share offer. So many models, probability models also we have done in the class. Yesterday only we have done probability, variety questions we have done. Horrible exam questions also we have done. I covered past RTP, MTP, past exam, study material, everything we have done. We completed. Now the question, after doing so many things, I have one small question to ask. Whenever in mergers chapter, we have to calculate the swap ratio. How we will calculate the swap? General basis you tell. Either NAV we will use, or EPS we will use, or MPS we will use. Correct? There is yet another way of valuing, that's called as a free cash flow model. Which model?
Free cash flow model.
Different model from all those. Clear everyone? That means I will not value on the basis of MPSC, EPS. What I will calculate? Free cash flow I will calculate. Then how the swap ratio will be calculated? Till now in exam, they didn't apply business valuation with mergers. Two different chapters they are operating. Mergers questions are separate. Business valuation or corporate valuation is separate. I don't think that they will ask like that in new syllabus. New syllabus like definitely papers are gonna be very tough and standardized. What he will do essentially, why only NAV? Why only EPS? Why only MPS? They will ask you to first calculate FCFF of both the companies. On the basis of FCFF, they may ask you to calculate swap. Then what will be the formula? FCFF of selling company by FCFF of purchasing company. Like that a question is not tested till now. But there is a chance. They can merge two chapters. What are those? Mergers and business valuation. We completed mergers. Now we complete business valuation. 4 days it will take to complete. All the 30 problems in the material we will do. 30 different types of questions we will do. ISM, RTP, past exam, MTP, everything we will cover. After that, let us see how we can merge mergers chapter with the business valuation. Why to value business? First tell me, what is the value of any asset? Future cash flows discounted at a required rate. What is the value of a share? Present value of future dividends. What is the value of a bond? Present value of future interest. Future interest. What is the value of entire company? Present value of future all cash flows. That means when you are valuing a share, only dividends is enough to value them. Only dividends are enough. If you are valuing only bonds, interest analysis is enough. But I am valuing a company, dividend interest only you should not see. You should start seeing from the sales. Listening or not? From what we need to analyze? From the sales we need to analyze the chapter. Clear everyone? I wanted to value only the share. What is enough? Dividend analysis is enough. I wanted to value only bonds. Interest analysis is enough. I am valuing only share, only bond, entire company. Company means only bonds and shares. So many cash flows will be there or not? That's why. See the screen once. How questions will come, I will show you. This is ISM question. New ISM I have taken this. AFM ISM question. From sales they will ask. See here. Revenues, cost of goods sold, like this. From sales, revenue means what? Sales. From sales they will give info. Again. Variety questions will come. Torture questions are there in the book. Properly if you do. And again I will tell you one point. Whenever I am a person who have to value. For example, I am given with an assignment of valuing a company. Outside you go to anyone. If you are working in any office, maybe you might have done valuation for startups. Have you ever heard startup? Startup companies shares will issue. Venture capitalists will invest in that startup. Clear? At the time what we need to calculate? A price per share startup has to calculate. Who has to? Startup has to calculate what? Price per share. In order to quote to the venture capitalist. Venture capitalist came. Startup company is there. It said, my share price is 15,000. Do you know how the startup prices will be? Per share 18,000, 20,000, 15,000, like that they will put. Because it's a private limited company. Market values will not be there. What will not be there? Answer. Will not be there. Therefore, they will give limited shares only. If it is a public company, scattered shares will be there. Private limited company, what will be there? Hardly 10-15% will be there. Means, startup company want 80 crore. How much? 80 crore. The entire 80 crore will be given by a little amount of group of people. Then why to issue lakhs of shares? Share price will be very big. Number of shares will be very less. That's why always startup company share prices are very huge. Listening? Number one. Tell me, venture capitalist came. I said, share price 15,000. Immediately you will tell, oh 15,000, take. Like that he will not give. Venture capitalist will appoint a registered valuer. Will appoint a that person will analyze the company's futuristic sales, futuristic costs, futuristic EBIT, futuristic EBT, futuristic EAT, futuristic EPS, futuristic DPS, and then he will value the company. Clear everyone? See the question here. I am not going to analyze anything now. I wanted to show the gravity and magnitude of importance of this chapter in the real life scenario. This chapter is not a theory chapter. Practically outside people are doing. If you are working in office, please ask your principal auditor tomorrow only, or else you will forget. Sir, valuation of startups or any valuation in the today's scenario, using what model world is valuing? With no stretch of imagination, they will tell free cash flow. Clear? That's why that became the darling of valuations. That was kept in one of the chapter in the new syllabus as well, in the name called as business valuation. In that chapter, FCFF. Clear? ISM there are 4 questions. I kept 8 questions in that. 4 ISM questions I kept, 4 MTP RTP questions I kept. Additionally, repeated way of questions are there with a change in numbers. In the question bank, I kept 69 questions in this chapter. Listening? We will be coming with the question bank also very soon. Almost the last one chapter is only pending. Once that is also ready, I will put it before you. Shall we start doing the chapter? Observe these numbers. Observe these numbers. What is this year?
2009.
Answer, yeah.
2009.
But we are expecting perpetually up to 2014 stable. Variable. 8% growth will be there. After that, perpetually it will grow at 6%. Means we are taking the present and estimating the future. Forecasting the future. That's how the valuations will be done. Clear everyone in the class? Clear? Deepika Padukone invested in a company F. Okay, FE. There is a company. She invested in the company. That company is now going for winding up. Almost insolvent. Gone. Do you know why? FCFF lo wrong valuations are done. Means try to understand clearly. Huge value they have shown. She is a venture capitalist for that company. Invested. Later, their estimates on what basis they valued are not happening actually. They estimated some revenues. Their actual revenues are not matching them. Gone. Are you understanding the point clearly? Yeah. Another, I will tell another name. Name I didn't remember. If you remember the name, you can tell me. Online doctor consultancy app was also created by one person. $18 million they raised. I'm forgetting the names. Some easy doctor. Something, I didn't remember the name. 2 persons started a company. Okay, they started a company, startup in Bangalore. Because that's a startup hub for India, Bangalore. They started there. Venture capitalists came. Huge quotation they have given on the basis of FCFF. FCFF is a model. How beautifully you use that depends on the value or valuing it. Clear everyone? Sir, for example, P0 equal to D1 by K minus G. That's a formula. Don't blame the formula for your mistakes. What formula will do? If you put input, I will give output. If your inputs are wrong, output will be wrong. FCFF is bad. Don't tell. Valuer is wrong. Listening or not? So, here the problem is not with the idea. Problem is with the ideology. Idea is correct. Astrology is right. Astrologer may be wrong. Astrology is a science. It's correct. Astrologer may be wrong. Idea is correct. Ideology framing person may be wrong. Model is correct. Person who is using that may be wrong. So don't blame FCFF for the wrongs done. FCFF is a model. Yeah, you put the numbers, input, output will be given. You are giving bad input, how the good input will come? Good output will come. If your input is right, output will be right. Your estimates, when you are inputting the estimates for the next 5 years, your estimates are beyond imagination, exorbitant estimates they have given, then output also will be like that. But the real life, when you see, in real time they are not generating that much cash flows. Flop. They are closing that company now. So like that, so many startups in India are failing because of what? Wrong estimates in using FCFF model. Listening, here tell me in this question, what is the growth they estimated? Next to 4 years, 10, 11, 12, 13, 14, how much? 8%. After that?
6%.
Maybe that may be wrong. You should estimate 12%. 6% you should not estimate, you should estimate only 2.5. If your estimates are wrong, input is wrong. Input is wrong, output is wrong. For that, what I can do? You should have used the model properly. Clear everyone in the class? In this chapter, these practical things we are going to analyze. Don't see this as a 4 marks or 5 marks question. We take it on a practical level of understanding. I will show you the practical case studies what are happening outside. Because we will be in startup venturing. In our office, startup ventures will be taken. Various startup ventures. So we have seen practically. I will show you some case studies, how we are going to do those. Then you will get a practical exposure as to how the valuations are done. Clear? Learning objectives. Now, what are the learning objectives? Need for the chapter. First we need, this is a need for chapter. Till now what I said? Need for the chapter I said to you. What is the need? Valuing the business. Like valuing a share if there is a chapter, valuing bonds if there is a chapter, for valuing the business also there should be a chapter. Hello?
Yes, sir.
For that one reason this chapter came. And this chapter is a performance evaluator. Performance?
Evaluator.
Sir, what do you mean by performance evaluator? Sir, new word. Listen. Whenever shareholders put their money, they will think about two things. Number one, they should get the expected earnings. They should have the expected price. For example, a person is investing in the share. When he is investing, he will expect that I should get somewhere around, may not be exact, I am investing in 1000 shares here. At least every year, par value 100. Par value 100. Par value 100. I am investing in 1000 shares. What he will generally expect? I should get a dividend of around 20 rupees per each share. Means 20%. Listening? That means company should at least give two types of satisfaction to the members, shareholders. Number one, dividend. Number two, Number two, unrealized capital gain. What do you mean unrealized capital gain? Hike in the value of prices. P1 minus P0. I invested 500. Price became 540. Very happy. Because I have a growth in price, I am also getting the dividend. Clear? Answer. Now tell me. I am expecting one earning. Whether company is performing to that level or beyond that level or below that level, there should be some indicator or not. How much, listening,
Yes, sir.
not how much one shareholder is expecting. Overall, all the shareholders on an average expect some KE. Expect a KE. So on an average, every investor may expect different KE. On an average, one KE will be there or not. Whether really company is meeting that KE or not, how can I know? Using a evaluation model called as economic value added. What is it? Economic value added. Clear? I will see only earnings growth, also market price growth. Market price growth also shareholder will look. That's called as a market value added. That's called as a
Market value added.
That's the two topics we are going to see. Earnings hike will be analyzed using EVA. Market price hike will be understood using a model called as MVA. MVA, two types will be there. I didn't write here, but in the problems we will do. New AFM booklet, there are one problem also given on that. General market value added, shareholders value added. We will do both. Listening up to here, please note down the first theory on this. Copy down. Don't see your notes. Introduction only you need to copy. Everyone in the live also please put a message. Understood up to here clearly? So once you write this need for the chapter, then we will be going into the first Primitive way of corporate valuation will be similar to share valuation chapter. Beginning problems I am talking about. The first primitive basic problems will be similar. After 2-3 problems, new concepts will start. Completed? Everyone, those who have the notes also, please write down. Intro you have to write. Completed? Can you go into the questions? Okay. See here. Just now, intro we started. I am telling you once again, we are valuing what? Business. Business means not just valuing a share. It is valuing a share, it is valuing the bonds, it is valuing entire company as a whole. Therefore, Slowly we will go into the problem models. First we will calculate shares. Next we will calculate the bond. Next we will calculate both. Next we will be calculating the concept of FCFF. Okay. Question la already they will only give FCFF to us. We will value the value of the company using FCFF. Last type la we will be calculating the FCFF itself. I repeat one more time. First shares. Next debt, not just bonds, debt. First shares, debt. Total of both debt and equity we will calculate one way. Next we will value, already in the questionnaire they will give FCFF values. Just we will value the company on the basis of given information. Last stage, FCFF also you don't give, everything you all should do. Those questions will come for 10 to 12 marks in exam. FCFF given 5 marks. FCFF not given, complicated question came, 12 marks. FCFF not given, moderate question came, 8 marks. So weightage of this chapter can run from 8 marks to 20 marks in exam. In one of the recent attempts, means November 2022 attempt, corporate valuation came for 18 marks in exam. Listening, one 8 marks question, one 5 marks question, another 5 marks question. Totally how many questions? 3 questions were asked. Totally 18 marks came from corporate valuation. All the 3 problems came from the book. I will show you what are the questions. Numbers change, concept is same. Okay. So that's why in the book I kept all the best problems from ISM, MTP and RTP. Properly you do that, enough from the exams point of view. Once the question bank come extra problems also we will do. Okay. See. Come to the questions regarding this chapter, please. Come to the first question. Okay. See here. Listen. Let us see the question first. First we are going to value what? Share say. First 2 problems share. Next problem also share. Variety question. When I say variety, not normal variety. One of its kind. Different way of question he asked for 12 marks in exam. First 90 mm rod. So see here. X Limited just declared a dividend. Whenever I say just declared, D0 or D1? D0. It's a D0. Just declared a dividend of 14 per share. Mr. B is planning to purchase the share of X Limited, anticipating increase in the growth rate from 8% to 9%, which will continue for 3 years. He also expects market price of the share to be 360 after 3 years. Question 1. Calculate maximum amount Mr. B should pay for the shares if he requires a rate of return of 13% per annum. The maximum price Mr. B will be willing to pay for the share if he is of opinion that 9% growth can be maintained indefinitely and require 13% rate of return per annum. The price of the share at the end of 3 years, if the 9% growth rate is achieved, assuming other conditions remaining same as in point 2 above. 6 marks question already came in exam. ISM question also. Read the question properly. Try on your own first. Maximum 3 minutes time I am giving, 1 minute for each bit. Why? Because share valuation chapter we have already completed. Start doing. Everyone in live, you also start doing the answers. Another 2 minutes. Last half minute. Okay, see here. Done with the answer, at least tried. I will also do along with you. Please. Listen. What is the question number? 1. Help me with the answers. First tell me, how many bits he asked us to do? 3. See here, time given for you. See here. Number 1. Tell me, this investor wanted to continue in the company for how many years?
3 years.
Tell me.
3 years.
His holding period will be?
3 years.
That means he will buy the share today, hold it for first year, second year, third year. At the end of third year, he will sell the share. First bit, he already given the share price at the end of third year. How much it is? 360. What is the growth rate he is expecting for the next 3 years? 9%. Because already he said that growth will increase from 8 to 9 in the next 3 years. Correct? Tell the answers now. First, value of the share. Year, cash flow, PV at the rate of 13%. Tell me. 1, 2, 3 and 3. Tell me, what is the first cash flow? 14 rupees is the just paid dividend. For that 9%. 15 point? Next. 16.57. Huh? Others also please do. Next. 16.63, yeah? Okay. Next. 16.63 plus 9%. 1? 18.13, correct? Okay, done. So next one? 360. Tell the values. 69? Directly tell the answer. 288.57. Hello, everyone, have you done up to here? Okay, bit number 1 over. Bit number 2, I will do this first. See here. Maximum price Mr. B will be willing to pay for the share if he is of opinion that 9% growth can be maintained indefinitely and required a return of 13% per annum. How to interpret this question? First tell me. Doing answer here, every person will do. Logic you should understand. What is the meaning? What is the holding period? In this bit, what is the holding period? Answer. Already I held, today is my disposal time. I will not hold for perpetual period. I will live for perpetual time. To hold it for perpetual period. Listening or not? Tell me, what is the price I am expecting after 3 years? I am not going to stay for 3 years. I want to sell today itself. Today if I have to sell, I have to take which dividends into consideration? Futuristic dividends into consideration. Are you understanding or not? Tell the value of the share. What is D1? D0 into 1 plus D divided by K minus D. D0, 14 growth. KE,
13.
tell. 14 into 1.09. 26 divided by 4%. Everyone got this answer? Everyone got this answer, but you didn't understand the question properly. That's what the problem is. AFM la problem is, everyone will do after doing so many. Share valuation we have done 30, 35 types of problems we have done. After doing so many problems, you will do the answer. But how you understood and done is the main point here. In reality, what is the meaning of that second bit? I already held for some number of years. He didn't give about past. Today I wanted to sell. Today, want to sell. Today when I am selling, what I am going to lose? All the perpetual dividends in future. That's why we calculated. Listening everyone. Next. What is the difference between bit 1 and bit 2? Don't tell value difference. Difference I am asking. In bit 1, we are buying today, holding it for 3 years and selling after 3 years. Second bit, already I bought long back. I hold it for some number of years. Now I am going to sell. That's the difference. Understood? Next. Bit number 3. Third bit. Variety bit. He is asking a value at the end of third year. P3 he is asking. He is not asking today's value. First bit la what he has asked? Hold for 3 years and sell. Second bit la what he has? Sell today. Third bit la what he is asking? Price only after 3 years you calculate. Variety bit. Tell me. We want what? P1 or P2 or P3? P3 depends on D4 divided by K minus G. Why? Present value of any asset is, okay, any value of any asset is present value of future cash flows. Tell me, what is the D4? Correct? Already we calculated. What is the D3? KE. Numerator. 494.0. That's all. Copy down. Have you got these answers, everyone? See here. Copy down this. Completed? Let us move on to the second question. I said, and I am repeating the same, share valuation chapter la share valuation work. Therefore, small questions will be there, big questions will be there, everything will be there. In this chapter, our work is not share valuation. Share valuation is one of the work. Therefore, second problem is direct. See, very good question. Let us see what is the question and its theme. I will give you 5 minutes time for you to solve this as well. Let us read. Sewell Corporation, a manufacturer of do-it-yourself hardware and housewares, reported a EPS of Euro 2.1 in 2003, on which it paid a DPS of Euro 0.69. Earnings are expected to grow 15% a year from 2004 to 2008. During this period, dividend payout ratio is expected to be remain unchanged. After 2008, earnings growth rate is expected to drop to a stable rate of 6% and the payout ratio is expected to increase to 65% of the earnings. The firm has a beta of 1.4 currently and is expected to have a beta of 1.1 after 2008. The market risk premium is 5.5, treasury bond rate is 6.25. What is the expected price of the stock at the end of 2008? What is the value of the stock using two-stage dividend discount model? Super question, enjoy. Try. What is the name of the company? What it is manufacturing? Sorry, do it yourself. First to do. Correct question he asked. Students in live batch also please do that and put the photo. Let me see how you are doing the answers. Live batch students also please participate. Are you doing that? Put a message. Done. Time up. Time up. Time up. Please listen. Have you tried doing it? Live batch students, please put an answer. How much you got? I think online students are also doing it. They are also not responding. Seriously, they might be doing. Struggling for answer. Another 2 minutes max. Please complete it fast. How much answer you got? Chitra Vichitra answer. How much you got? Any answer? No? for you? Four-point disaster. Disaster answer. How much you got? Did you get any answer, Jack? Did you get any answer? No? KEL. In this problem, if there is anything to do, that is KE. Bro, how much you got? Did you do that answer? Doing? You? You? 2? More. That much also will not come. Both persons are in extremes. One person is too low, 4 rupees. Another 270, too much high. That's what I want to tell. From this, what is the moral of the story about this chapter? You might have understood now. First problem, starting, this chapter will start with a high range. Why? Because share valuation already we have done. But still this is a question mark. Shall I do? Now you help me with the answers properly. First, help me with numbers. Question number 2. Live batch, are you sleeping or what? Respond something. Why group is dormant? I think live students answer something. Trying. Okay, try until you succeed. Sir, okay. Let me answer this. See here. First point number 1. How many periods are considered here? 2 types of periods are there. Number 1, variable growth rate. Number 2, stable growth rate. 2 types of periods are given. See the question. Okay. So, see the screen. See the screen. Step 1. Calculation of KE. You have done that successfully. See the screen. See the screen. What is the formula? KE equal to RM minus RF. What is RF given? Listen. This is variable growth period. This is stable growth. Variable growth ki 1 RF, stable growth another RF was given. Beta na RF changed. Okay, beta. So now tell me, what is the RF? 6.25. Bond rate, treasury bond. KE also wrong. KE also wrong. KE also wrong. You have taken 5.5. 5.5 is market risk premium. RF is what? Risk free. Treasury means RBI bonds. Plus, what is the beta? 1.4. RM minus RF 5.5 value. No, that is market risk premium. He has already given. Tell the value. 6.25 plus 1.4 into 5.5. Total 13.95. Next, stable growth period. KE equal to RF plus beta into RM minus RF. RF plus beta 1.1, 5.5 value. 12.55. Hey, tell correctly. $12.3. First step everyone understood clearly, yeah? Hello? First step everyone understood? Do it. Write down. Step 1, calculation of KE. Step 1, calculation of KE. Done up to here? Make it fast. Shall I go to the next step? Step 2. Listen. What is the new point in this question? Nothing new. Already we have done problems of this kind in share valuation chapter. This problem is again concentrating on changed payout ratio. I told you, growth means what growth? EPS la growth or DPS la? G equal to 8%, a person has said. Growth 8%. Growth 8 means growth in EPS or growth in DPS? Answer. Growth means growth in both EPS as well as DPS if the company follows same payout ratio. I told you this in introduction classes or not? That's all. What grade he is asking even in this question same. If the payout ratio is changing, growth is a growth only in the earnings, not on dividends. Array, we have done the problems here, nothing new. Shall we do? Write down first. Calculation of. Write down. Write down along with me. Step 2. Calculation of current dividend payout ratio. Dividend payout percentage equal to DPS by EPS into 100. See the question and tell me what is the DPS this year? On what EPS? Write down. $2.1. 32.9. 2 digits lo you tell. 86. 2 digits lo you tell. 32.86%. Up to here everyone got the answer. Next. Step 3. Step 3. Shall we continue? This I will do and I will give time for you to copy. Just put the heading and leave. Valuation. Valuation. Help me with the numbers, please don't do along with me. See the screen once. Year. Next. No. EPS. DPS. PV at the rate of, tell me how much we need to take? 13.25 we should take, 12.3 we should take, is a question now. Answer?
First 5 years.
Wrong. We should take 13.95 only for the entire question. Only for the last year we should take 12.3. Do you know why? Listen. 13.95 is the PV factor we have to consider because valuation you are doing today. Share is valued today na in future? Today we are expecting future cash flows. Today what is the KE? Okay. Now you should tell, I should listen. Year 1, I mean, which year you started investing? 2003. So next year will become which year? 2004, 2005, 2006, 2007, 2008, 2008. Hello, listening. Tell me, when he wanted to buy the share? Today. Hold it for how many years? 5 years. At the end of 5th year, what he will do? Sell. Therefore, I want P 2004 or 5 or 6 or 7 or 8 or? We wanted to sell the share in which year? Yeah? 2001 or 2 or 3 or 4 or 5 or 6 or 7 or 8 or? Therefore, we want P 2008. P? That's the first question he asked. That's the first question he asked. Total value he asked in the second question. See the screen. What is the EPS for the next year? You tell me growth. What is the growth here?
15%.
See the question. From 2004 to 8, what is the growth? 15%. Tell. EPS. Tell ya. 2 digits you close. 2.42. Next. Fast. 2 point. Next.
3.19.
Next.
3.67.
Next.
4.4.
4 point. Stop there. First 5 years. On that, what is the payout? Multiply and tell and counter it with 2 decimals and tell the answer. 0.79. Next. 0.91. Next. 0.05. Next. 2. Next.
1.39.
Stop there. Stop there. Listen carefully now. Answer to my question. We want value at the end of which year? 2008. Formula. Tell me. Tell. D 2009 divided by K minus G. D 2009 can be written as 2008 into 1 plus G divided by K minus G. Wrong. You should not do like this. I told you very clearly. Payout ratio changed or not changed? Changed. Listening. Payout ratio is changing from which year? 2008 onwards payout ratio is changing. Then listen carefully. What is D 2008? 1.39. Answer, yeah. This 1.39 came by applying a payout of 65%, 32.86%. Then how can you do that? So you cannot directly do. If you apply growth of, how much is the growth in the perpetual period?
15%.
No. Array, you are not reading question. How much? 6. Perpetual period 6. So, if you apply 1.39 into 1.06, you are applying growth to what? I repeat one more time. You didn't understand. Listen. No. Listen carefully again. What is 1.39? What is 1.39?
Payout ratio for the
Payout 1.39. Dividend, not payout. Dividend for the year 2008. Clear? That is obtained by applying a payout of how much? 32.86. If you are taking that to perpetuity, what will happen? You are taking payout of 32.86 to perpetuity. But perpetuity will be obtained by applying which payout? 65, not 32.86. That's a wrong number 1. Shall I tell what is the second wrong? Tell me. What is 1.39? 2008 to 2005 leave off. What is 1.39? Tell, tell me what it is. Dividend. On that what you are applying? Wrong. Because payout ratio is changed. When payout is changed, growth is the growth in earnings only, not on dividends. When payout ratio is changed, growth means growth not in DPS, growth only in EPS. But you are applying on DPS, which is wrong. So tell me now, what is the earnings of 2008? D 2009, see the screen, D 2009 can be written as E 2009 into payout ratio. E 2009 can be written as E 2008 into 1 plus G. Whenever payout ratio is changed, growth means growth in EPS, not on DPS. Therefore, apply on EPS. Okay? Tell me. Into payout ratio of 65. What is the, one second. What is the E 2008? Growth. $4.22 into 1.06 into 65%. 2.91. 2.91. How you got 2.91? How you got 2.91? First 4.22 is what? Earnings. Into what? Growth. It will give you E 2009. Into payout ratio will become the dividend. Okay. Whole divided by KE. KE. 12.3%, not 13.95. 12.3 minus, tell me, 6%. 2.91 divided by 46.19. 46.19. Apply 13.95 PV factor. Three digits.
878.
Next.
0.770.
77.
0.593.
Huh? 676. Next. 5. 5 2. Multiply until the final answer. Click M plus. 0.79 into 0.878. 0.91 into 0.770. Put the M plus. Properly calculate. Don't make mistakes in valuation. $27.61. Correct? 27.61. Everyone got the answer? Now tell me, this all calculations we have already done in the share valuation chapter or not? Nothing new. But variety, they asked the question, changing the growth, changing the KE, changing the payout ratio, all are changed in the question. Therefore, it seems to be like difficult, but not. Again, I am repeating this point, listen, basics are always valuable. Whenever I say growth, growth is a growth in both earnings and dividend. If the company follow same payout ratio, if the company changes the payout, growth is growth in earnings only, not on dividends. Clear everyone? So therefore, See here now, I will ask you a question answer. What is the EPS of 2004? What is the EPS of 2005? What is the growth? Answer. Now take calculator everyone. 0.91 minus 0.79 divided by 0.79 into 100. 15 almost. These are approximated. Na? So how much answer you got? 15. What is the moral of the story? Growth in earnings is the growth in dividend because you are following constant payout for the first 5 years. Listening? Next, tell me. If you change the payout, automatically what will change? Payout will change, that's all. Earnings growth will not change. Listening? So tell me, growth means what? Growth in dividends or earnings are? Growth in both if company follows same payout. If the company changes the payout, growth means growth in earnings only. When payout is changed and the growth is only growth in earning, how can you apply growth on dividends? Therefore, we will calculate EPS, apply growth on that you apply the payout ratio. That's how we need to do. Already same concept I said in share valuation chapter, but not this much complicated. Clear everyone? This is the second question you have done. Copy down. Second, directly the schedule you copy. First you copy down the schedule. Q2 means question 2 answer. Q1 is a normal answer he asked. 46.19 is a Q1. This is a Q2. What is P 2008 and 2004? 2008 is Q1, 46.19. 27.63 is a P 2004, value today. Copied the answer? Third one, you copy this. Calculation of price at the end of year 2008. We should apply growth on what? Earnings, not on dividends. That's why EA 2018 to 1 plus G. Clearly I have given there Q1. That's the answer for question 1. Completed writing? So, with this, we completed how many questions in business valuation? 2 questions we have done. Another 25 different types of questions are still there. Slowly we will do our 4 days. Excluding today, 4 days will take. Slowly let us complete this chapter to the fullest. All the questions we will do, 25 extra questions are there, we will do those. Once question bank come, another 10 extra questions also we will do, which are unique in nature. Repetitive we need not do, that's for your self-practice. Non-repetitive, any new questions are there, we will also solve them. Clear? So with this, we will stop the today's class. Tomorrow's session we are going to do more number of problems on share valuation only. Variety questions we are going to do. Clear everyone? Thank you very much. Meet again in the next session. Good night. Live batch students also very good night. Tomorrow's session will continue with the remaining part.